Good evening, 9:10 p.m. Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire, and I want to take you around crypto in 60 seconds before we play this video, and then we'll come back to further touch on the charts. But I want to do a quick rendition of a 60-second rundown so you guys know what's going on in the immediate short term. But first, you have to watch this. Okay, so welcome back. XRP Future Millionaire, and we have to do this in 60 seconds or less because that stubborn media is going to cut us off. So Bitcoin, 38,497. What I'm seeing around the horn here is we're completing bullish divergence in Bitcoin, and we talked about this in my hour class. I'll talk about that more if you want to be a part of those. You see we are creating the bullish divergence as we speak in the 30-minute time frame. So now we go through all of crypto, and we were going through to find good buys. XRP starting the bullish divergence on the 30-minute, which means we still have a layer left. And I predict about 7 to 10% here on most of these across the board. XRP should probably end up somewhere like this, and we're going to create head formations here. So I would expect XLM to do the same thing and create its bullish divergence. It's already coming through the 100-day now. XLM, you would expect it to come up to about, where's XLM? About 19.4 area, but we'll go over this in a second when I come back around. And then DGB, we're just starting to pull through the 100-day, and I expect this to come back up to 2062. We've got an interesting two of them outside the box. We've got Spell. It's just starting its bullish divergence here. It's just about to come through the 50 in the 30-minute time frame. It's got plenty of room, and I would expect Spell, if we are pulling this narrative that we're thinking, and this is the immediate short term, and it might not even be worth it for you to gamble here, because to a lot of people it's not. To me, I'm indecisive. I haven't got in yet, but I'm looking at a target right now. Two of them that haven't made their moves yet. And I'm actually looking at Spell and AVE. So it's Spell. If you think this is going to go up and this is going to be just a slight minute, we're going to have to come back to Spell and AVE right after this.
To you both. Jonathan, I'll start with you. I mean, perhaps not surprising to see the market down slightly this morning. It does feel like there are three key pillars that we've been talking about for quite some time that are moving equities, and that is earnings, that is geopolitics, and that is the Fed, and the intersection of all three. How are you gaming those out, and where do you expect major averages to go from here?
As much as right now we're feeling an awful lot of tension in markets, we're pretty optimistic. We just put a note out which just highlighted that corporate profits, the projections for 2022 are up something like 2.5% now compared to the beginning of the year, even though the market's off by 9% or so. So that side looks pretty good. And as far as the Fed is concerned, if given the inflation, if they didn't acknowledge the situation, and if they didn't talk about getting off of a zero interest rate, then I think we'd have something to worry about much more than the fact that the Fed is looking to move interest rates towards 2% over the next couple of years.
Nancy, I mean, what's so key about this Russia-Ukraine situation is the fact that it comes in the midst of what was already a perfect storm for inflation, for example, and a Fed that is moving to tighten, and the question, of course, being for the markets, tighten how aggressively. What does this ratcheting geopolitical situation mean for Fed policy? I guess, how is the bond market and how are some of these volatility ETFs such as yours factoring this in? How does that play out?
Well, I think, Morgan, you said it well. The clock is ticking. We have a lot of unknowns out there, whether it's the geopolitical situation or the Fed's policy itself. I think the big unknown is really the balance sheet and whether the Fed gets more active and more vocal after the March hike with balance sheet reduction. Right now, there are so many hikes that have been priced in already into the market, and we still have inflation prints. So I think this is a time that the Fed is going to have to pivot and do more, and it's probably not with just rate hikes.
Jonathan, asset managers typically have a tough time sort of figuring out the implications of geopolitical movements like the ones that we're watching right now. So What does history tell us, if anything, in terms of how we should approach what's going on between Ukraine and Russia?
Yeah, I think that you hit upon it. When I've been talking to managers, whether they're at mutual fund shops or at hedge funds, what they all basically say is just focus on the fundamentals, that this is going to be, likely the source of some near-term volatility, but over the long run, the fundamentals are going to win out. So I'm not seeing an obsession on these. I will tell you that's not the case with folks who are, engaged in energy markets or those exposures, because obviously it's a bit more impactful there. But in terms of broad-based earnings or the broad-based economy, we just saw recently, these numbers, these PMI numbers came out super strong. But we are going to see, some slightly stronger inflation prints distorted by oil prices. But I don't think the long-term story is any different.
Nancy, although a lot has been priced in, a lot of people are drawing comparisons to the recent S&P action to December of 18, when you did have a Fed that was trying to tighten into a slowdown. Some have done some work that says that would imply an S&P 3 handle sometime in March. Now, these analogs don't always work, but I wonder, have you been impressed with the way in which history is rhyming here?
Well, I do think the market has to keep in mind that the Fed is just talking right now. They haven't actually done anything. They're tapering. They're still buying bonds. QE is still going on. We haven't actually started the quantitative tightening. And if you look back into history, December 2018, Chairman Powell was still at the helm of the Fed. We obviously had a different president at that point, but the rates market had priced in 3 hikes in 2019. And what actually happened is the Fed cut rates 3 times. So I do think it's an interesting opportunity with all the geopolitical issues going on to actually look at the Fed hawkish guidance has already moved the market. So you have 7.5 rate hikes already priced in. And I think it's a unique opportunity for strategies that can benefit from the steepening of the yield curve, whether that's lower front-dated yields or higher long-dated yields, which would normalize in a more risk-on environment.
Okay, so what we were saying, I hope you enjoyed that. I got to get done with this update, though. It's time for my son to get going to bed soon. He's a little active. So we'd be looking at about 5.2 for a top-end move, but the first thing you'd be looking for is to try to get out is 4.53 if you were in Spellcoin. That's not a huge move, I understand, but that's that 8 to 9% move right off the top of this cup, and that would be a safe play from here, it looks like, as long as it holds that red line, which is the 20-day, and then AVE, which I talked about. Told you this is going to be a quick, straight to the point, and then I wanted to show you that with what they're talking about with the Fed and everything. So AVE, if it holds this $124.20, the first move you'd be looking at is $131. So right about here. That's 5%, but then the move you'd be playing would be the $142, which would be up here at 13. But like with the rest of the market, there's this spot right here at 8.59% at $135 that you would obviously have to pay attention to. So we know the short-term move that it could hit right here and get stopped, obviously right there. So I guess I could keep it there. But then right above it would be the actual targeted move. But if it's going to complete this bullish divergence here, I think it would have to come up to $142 minimum to complete this in the 30-minute time frame. So that's what we're looking at across the market. And real quick, just XRP, a synopsis of XRP, because that was pretty quick. XRP, we're looking at a move. As long as this plays out what we're seeing, and that doesn't mean we can't get a back test of the red line first, which is right here at 68,651. We would expect this targeted move to go no less than 72.2, but more than likely it's going to come up to that 74.9 area. Make sure to hit that like button, turn that bell notification on. If you're interested in the classes I was talking about, join Tom's Army, $9.99 a month. Join the other 237 members now of Tom's Army. It's exploding. You get the Telegram for free. You get this for free. I give this to everybody. We have Tom's Army right here, and you can get into the classes. The classes are free on Twitch. I just asked for a $5 donation at the end of the hour class. No monthly memberships, just for my time. Show your appreciation. We have 235 members in Tom's Army in the Telegram. You get this for free by joining Tom's Army, showing me the support on YouTube. Stay blessed, everybody. Hashtag be better, do better. Hashtag FUD assassins. And remember, help one person each and every day, because if you don't do your part and I don't do my part, who's going to do their part? And the future generations are going to be screwed.